So we see gold prices this year probably $22,200 an ounce. Again, minus wild cards. You don't know. And there are many wild cards, by the way, that are very positive for gold. The Ukraine war being one of them, and the Middle East meltdown, which is one of our top trends. Again, in trend tracking and trend forecasting, we call it globalnomic. All things are connected.
Gold rose on Friday after a sharp fall one day earlier, helped by a slight retreat in the dollar, as signs of cooling U.S. inflation raised bets that the Federal Reserve will likely end its monetary tightening cycle. Gerald Celente, the founder of the Trends Research Institute, believes that when the dollar's value weakens, more countries and individuals can purchase gold using their currencies. This is because gold is dollar-based, and its price becomes more affordable for them. He predicts that gold prices may reach around $2,200 an ounce this year. The dollar's strength is closely tied to high interest rates, as they attract investors seeking better returns on deposits and investments. However, if interest rates start to decrease or an official announcement confirms no further rate hikes, the dollar is likely to depreciate. This depreciation leads to a rise in gold prices as investors seek a safe haven asset to protect against potential currency depreciation and inflation, making gold more attractive than the weakening dollar. Gerald emphasizes that central banks seem to acknowledge the severity of the situation as they have significantly increased their gold purchases. This further supports the idea that gold is considered a safe haven asset during economic uncertainty. Regarding the rise of the BRICS nations, Brazil, Russia, India, China, and South Africa, Gerald believes they are dissatisfied with American hegemony and could be interested in returning to the gold standard or backing their currencies with gold. We will now bring you clips from Gerald Celente's interview with SOAR Financially. But before we do, if you want more videos like this, ensure you smash the subscribe button and turn on the notifications bell for more videos. Thank you and enjoy the video.
And the only reason the dollar is strong is because interest rates are high. When they start lowering interest rates or it becomes official that they're not going to raise them anymore, the dollar's going to go down. The dollar's been on a dive for the last several weeks. Not a dive, but going down. The dollar's going to go down and gold prices are going to go up. The only reason that gold prices haven't gone up, other than them probably rigging the game, and I don't make that up because JP Morgan Chase was fined $900 million in 2019 for rigging the precious metals markets. So the only reason the gold is down is because the dollar is strong. Economy goes down civil unrest builds up in Israel. Israel's going to start attacking more Palestinians, maybe going into Lebanon, doing something to Iran. These are the wild cards. The Ukraine war heating up as they're sending more missiles into Russia, and Russia's sending more into Ukraine. So the wild cards there are wild cards out there that, to me, and again, there are no advertisements in the Trends Journal. To me, gold is the number one safe haven asset. Well, again, the uncertainty of where the future is going economically. And again, the equity markets have no representation at all of the general public. It's a game that's the bigs gamble in. So, but the people are feeling the pain. And what they're doing, again, you don't have to believe me. Why don't you ask the central banks? They bought, 155% more gold in the first quarter of this year than last year? They know how bad it is. Central banks know how bad it is. So going back to what the people are feeling, if those that have, again, 1% in the United States controls 54% of the U.S. equity markets, 10%, 90%. So the average person isn't in there, and they don't know how to play the market. So they go for gold as well, the ones that want, to hold on to security. So again, to me, and again, now you're seeing more and more countries, and Russia being one of them, going into the digital currencies that we've been warning about, by the way, in the Trends Journal since like 2015. One of our covers of the Trends Journal in March of 2020, from dirty cash to digital trash. They know every penny you spent, what you spend it, what you spent it on, so they could get their tax money and have more control over you, knowing your life. So Gold is that number one safe haven in that scenario. So you asked for another one. So digital currencies is another reason to go gold. Going back to BRICS, they are disgusted with American hegemony. And I believe that they're going to be going back on the gold standard. And they may create their own currency or stay with their own currencies, but backed by gold. And America only got off the gold standard in 1971 under Richard Nixon. And people have no idea of the why. The why is because of the Vietnam War that was sucking all the money out of America and inflation moving up. So they had to keep printing more and more cheap dollars. So going back to your question, BRICS is very simple. BRICS is going to keep building because they want to build their own brick economy and not that of the United States.
Gerald believes that the banking crisis is just starting and could lead to a significant increase in defaults, where many people might struggle to pay back their debts and risk losing their homes. The banking system is facing severe issues, but most people might only fully grasp the severity of the situation once it's too late. The crisis tends to unfold gradually, and its impact becomes apparent over time. Despite the existing problems, Gerald believes the stock market will remain relatively strong for some time, which might create a sense of stability and complacency among investors. However, he predicts that by around late September or October, the crisis's reality will become more apparent. Let's get back to the interview.
The banking crisis has just begun. There's going to be defaults like you can't imagine. Again, we're detailing them week after week in the Trends Journal. Office building bust. It became one of our top trends for 2023 because we said this is the year they're going to start finally realizing it. And when I say start to finally realizing it, you go back to 2021, they were buying up buildings like crazy, not understanding that this work at home trend, it's part of the new reality. People are not going to be going back to work full time, and the office vacancy rates are going to stay high, and there's going to be foreclosures and failures to pay debt, and the banks are going to go bust. It's just begun. And again, this is very important. People don't realize how bad it is until a crisis happens. They don't, if you're dying, they only know it when you're dead. And that's the same thing with the banking system and with what's crashing it. It's dying. They're only going to realize how bad it is when it's dead. And then the reality hits when the equity markets crash. Then the people on Main Street realize, it's only not me that's suffering, even they're suffering. That's when it becomes, but don't worry about it. As I said, when all else fails, they take you to war. What followed the Great Depression? Oh, World War II. What followed the dot-com bust? Oh, the war on terror. And now they got the whole world hating Russia, the whole Western world, and we got to stop them, and we'll do anything we can. So World War III's already begun. And again, the people march off like clowns all the time. 88% of the people in America were so damn stupid, they swallowed the crap coming out of the mouth of a little boy of nothing, George W. Bush, a little daddy's boy born on third base and thought he had a home run with a mind of a clown. The mind of a clown. 88% of the people swallowed the clown crap that we got to invade Afghanistan and get that guy Osama bin Laden dead or alive. Not making that up. So they'll march off to war. And that's what people better understand. It's not only about the economy. You got mentally deranged people in charge in a country near you. Market's staying pretty strong for a while. But reality is going to start setting in around late September, October. Right now, the people are in a summer state of mind. They're tuned out. They have no idea. They want to have a good time, vacation. I mean, you're in Europe. I mean, Europe is all there right now. It's tourist time. So your services are going to go up. It'll keep the economy up. But again, you look at manufacturing, which really counts. That's way down. And this is also very important. We're talking about inflation. This is going to keep inflation high in the service sector because of tourism, because they're going to keep they got to keep it going. and the money's coming in, they're going to keep the prices high and get all they can. So, but we see it slowing down after late September, October. That's our best estimate of when we see reality hitting the streets.
Looking ahead, if the dollar becomes weaker, investors may choose to buy gold to protect themselves from the risk of the currency losing value and safeguard against rising prices, inflation. Could gold be a reliable investment choice as a safe haven asset amid fluctuations in the US dollar and interest rates? Please share your thoughts in the comments section below. If you found this video informative, remember to give it a thumbs up, subscribe to our channel, and enable notifications to stay informed about our latest videos on silver, gold, and copper. Thank you for watching, and we appreciate your support.